Hey, hello everyone. Welcome. This is my first live on FX trading. I've been trading for some years now, and um, I'm a student of WWA, and I really want to thank them for all the knowledge and support they have been giving me along the years. I hope that I um, am someone to be proud of in the future with these live tradings, so that um, I hope they like what I'm trying to do. My idea is to help everyone that is on the same path as me, some more advanced, some more beginners. There are always some nuggets that we can take out from seeing other people trading, and so my idea is to go on that and help everyone. I hope everyone enjoys. So, without further ado, let's start. I'll share my screen, which is this one. Okay. So to begin with, I've cleared all my drawings. I was just starting to design my to make my drawings. So if we start by the higher time frame of all, the most important move on the monthly is this main push here. Right now we are on, or we have been since 2022 on the complex pullback. If you don't know what it is, I can explain later. I'll. This is not a live event for beginners. So if you're a beginner, I would say go and talk with other guys that show basic things. I'll try to be in my all efforts. I'll try to be the most clear as I can. But if you have any doubts, of course, I'm available to chat a little bit and explain. Other than that, I just wanted to say that this is more for intermediate to advanced level. So if you have any doubts, please put them out. Okay, so we are on the higher time frame, on the monthly time frame. We are bearish. That's why I have this minus symbol after the M. We have also, I can see on the weekly that we are bullish with the extremes defined by these balls that I use to help me guide my trading along the way. When I'm getting close to one of these extremes, I see this ball and I see it's like a big ball. So it's a big extreme. The balls are are changing colors and reducing in size along the way as we go to lower time frames, so that we always know where we are in terms of the market. I also use these lines to define the breaks of structure, to the downside if it's red, to the upside if it's blue. These black arrows usually show something of structure, previous structure or future structure. In this case, it's a previous high that was broken. It's a weekly previous high. These blue balls means that we are bullish on the weekly time frame, and this means that this the connection of the last two balls is our trading range um, on the weekly time frame. So seeing this, we are on the weekly already. So our training range is now, sorry, our training range is now this weekly range. As we can see on this weekly range, We also see that we didn't have a very well defined structure on the daily. Maybe I could use at least this one and this one as some reference points. But along the way, there are some structure that is not very perfect. It happens. It's the market. It is what it is. What it is. But we have all these points defined, these swing points defined to know where we have some important points. Other thing that I like to mark is the high to clear or the low to clear. In this case, it's a high because we're bullish. So the last high is of it's obviously the higher high, and it's the high to clear in this case because this higher high didn't arrive yet to any structure points. After that, we will see probably lows to clear. And in this moment, we didn't arrive to the higher time frame, which is the monthly. Um, and so we will have weekly highs to clear until get there. Or if we have a break of structure to the downside, it becomes a low to clear as well. So um, in this case, I usually try to find decisional points, important ones, and extreme points. This is part of my education. So this weekly extreme and this decisional extreme are weekly extremes. It should serve as a bouncing point when the price is retracing, so that it keep going up, or it break the structure, and that is a very good sign for us that the price will probably try to get to the weekly extreme. So if we see some sort of retracements after breaking this decisional, the most probable thing is that it's going to keep going down. So we can try and find new sales to go down. Of course, we're in a very high time frame, so we don't make decisions just yet. Um, a lot of times we are in a point where we have different bullish or bearish, whatever. But imagine that we're bullish, we have different bullish time frames, and then we are selling. Why are we selling when we are bullish? Well, because the price does something like this: it goes up, goes down, and goes up again, right? But inside the inside each move, for example, in this case we are bullish, we have moments where we are bullish, moments where we are bearish on lower time frames. So this is how the market moves, exactly how you see here, right? So here we are bearish, we could sell, right? We can sell here, we can sell here, we can sell here. We just have to be careful because we are in counter trend when we're doing that, which means that probably the move will be, if it is not very close to this low and the price doesn't want to keep going down, if we are selling from here, we know that it's probably a short move or shorter move than it would be with a impulse, right? With a with the main push. So that means also that we can buy and sell inside. So we can go like this one is bullish, this one is bullish, but then inside this one we also have bearish. And we're talking about like moves from here to here. We're talking about moves that can go to 1,500 pips. It's a lot of pips. So when we're seeing things like this can mean 500 pips, another 500 pips, another 500 pips, but they're moving a little bit sideways as long as it's going up, but it's a bit of a sideways, right? So we would love to get like a move like this. We were talking about 700 pips, right? Even this one, we're talking about 530 pips, and this is a move that is more or less this size. So we're talking about a lot of pips along the way. So although we have like a thousand pips, if you make if we would sum this, it would be much more, because we find 500 here plus going down 400 again. We're already on the 1,000, so 1,500. Then 2,000, and from here it's 700, so 2,700. It's already more. We're about 50% of the way, and we are already 2,700 pips up. Um, of course, this is just impossible to. Well, I will not say impossible. There are some guys that do some amazing things, but this should be almost impossible to get all the moves until you get there. So what I try to do with my strategy is to find some point like this one where I can try to get this move. So this is 1,300 pips. If I could know that this is the point of inflection and this is the swing point where it's going to take me to the new high, um, if I can try to predict this, this means that I have immediately a possibility of 1,300, and after that I can go for a sell here at the same time I'm buying, because um, we can edge, and in that case I can buy there as well, or I can buy here again. So you can go up on your positions along the way, even because you probably won't get this position with 100% of the volume all the way up, at least not on my strategy. So I was just trying to explain why sometimes we can sell when the price is bullish, or buy when the price is bearish in the higher time frames. Like we were talking about, for example, this move would be 700 pips, right? So why not try to get it? But why not try to get this move as well? We are talking about 300 pips. 300 pips. It's a lot of pips. It's in just one candle in one day. We're talking about 180. Just this day we're talking about 270. So a lot of pips along the way. So let's try and see what we can do. It seems like we broke up on the weekly. We have three candles that show some kind of um, loss of momentum, right? We had like a big momentum up. We were slowing down, then we got a big momentum up, and then it seems like we're slowing down again. It might just want to get to that extreme, and so the market, what the market is doing is trying to go to that extreme, and maybe that's the reason why it didn't break down um, before getting there. So it might be trying to get to the extreme so that then we can see some kind of retracement. But it also can happen before. So that's the nature of the market. It happened here. Um, it was going up and then came down, but here it was much more of a big move, right? It fell 500 pips after going up 630. So 500 pips on 630 is a lot. So it's like 70%, 75%, which is a very important fall before keep going up. So basically what happened here is that it gained momentum out of this decisional to keep going up. So this decisional was touched yet already. It got some orders that were standing by here because of this big move. I'm sure there are a lot of orders here as well, as it seems like it just one day it moved like hell here. So it's probably a good place to start looking for buys when it gets there. Also, this one. So, but we are too far away from there. So it's 600 pips. We're very far away. We try to get in each session like 50 to 100 pip move, um, if in the very good days. So let's try and see what's waiting for us on the lower time frame. So on the daily, we can see. that we can see that we are bullish. This is our last main push that I've designed to the upside to was the move that broke this structure. So here we have an important extreme. Definitely, the price might want to come back here, revisit before going to that extreme. It does that sometimes. Like it came here first, it stopped, it had some support on this former structure and on this imbalance that was in need to close. It closed this last imbalance. It left all this liquidity, all these imbalances, with probably a lot of orders that are there along the way right now to support the growth. So right now we're trying to see. This is the extreme. This extreme is a daily extreme. We will refine this because it's a very big point of interest. So I'll refine it on lower time frames just to have an understanding on where we are in terms of unmitigated candles on the high time frame, and we already have an extreme on the upside, which is a weekly extreme, but it's also the daily because it's the same point. I leave it as the weekly because it's stronger, and also I also have this high to clear here to know that this, although this is stronger than this one, if it was a daily extreme, it's stronger than the weekly is stronger. I want to sign, I want to have some clue on the probability of that supply to hold, because if it is the high to clear, it's not supposed that this high, uh, this extreme has a lot of strength, right? So we have a more powerful demand until we get to a high time frame extreme. But the thing is, while it's coming down to retrace, it can even retrace to this point we are going. It's the 4 hour point. It can come to the 4 hour, go back, revisit this extreme, come back down, even come to this extreme. So a lot of things can happen out of this extreme before being broken. So it's just to have in mind that the objective of the market should be keep going higher as we are very bullish. Okay, so on the daily, we can see that we are also bullish. I think. Let me check. Let me put a plus here, and now we're going for the 4 hour. Daily, on the 4 hour, on the daily we have the 4 hour moves. So this is a 4 hour move. I think this move is below. Then we have, well, this is not the perfect structure, but it's not that bad. It's actually, we can see a big move there that came back and mitigated the former extreme. And after that, we just have one move to get to the break of this last structure. Okay, so this is our main push on the weekly right now. Sorry, on the 4 hour. So 4 hour bullish, it will start to be bearish as soon as we break this low, which I think it might not break, but it's just my opinion. Although this would become the 4 hour BOS. I like to put this these notes because if it is a 4 hour or not, it's a very important moment. I also know that this is a strong demand. So by seeing this, I know that this supply should be broken, and this demand should not be broken. But if it breaks, it's a break of structure. And if we go and break the structure, then we will look for the high low to the lower high, and after that, we will probably have a new push to the downside because the 4 hour is a very important higher time frame. Um, and being this an important demand, it's important to have in. It was touched already, so this when that happens, I usually have some notes here saying that it is a consumed POI. So it was not fully consumed. That's why I keep it here, but it was consumed. And so what happens here on the 4 hour is that we have 1 hour structures below, right? So if we want to define the 1 hour structure, sorry, the 1 hour. Okay, sorry. 1 hour. The 1 hours. What? This is the 4 hour. The same? Should it be? Okay. The 1 hour is green. To me, the blues are more important than the greens, so higher time frames. So blue means 4 hours with the same size of bullet, but um, it is green because it's less strong, supposedly, than the 4 hour. This is the max we can do. So we have also seen that we had a break of structure on the 1 hour, right? So the move starts already coming down. Um, we actually already have some legs to come down on the 1 hour. We have already one leg, two legs. So this is the 1 hour trending range. And as you can see, we are bearish on the 1 hour. So we are bullish on the 4 hours and we are bearish on the 1 hour. We are in the beginning of the move, which I incline to say it's a complex pullback to the previous extreme or decisional. In this case, we could see that the decisional was probably this retracement here. This would be the decisional. It was broken immediately. So if it was easily broken, it means that probably it has some strength to come to get the 4 hour extreme. Right now, we are seeing a reaction before getting to that extreme. I don't know the distance. It's about 10 pips. Because it was a very important retracement, we're talking about, let's use the fib. Um, because we're talking about a retracement of 78%. We are also less than 10 pips away from the extreme that was consumed before. So it can have already the power um, to recover, even because we don't have actually an imbalance here that needed to be mitigated. And so the price might hold and already be it's um, it can be already ready to break on the upside. So seeing this, um, what happens is that we need to see what's going on inside, right? So we want to know if we want to. We could do several things. One, we try to see if there is any opportunity here to buy and go on this retracement, and also, of course, go to that price again. If we could get in here, not even this retracement would be enough for us to lose. But we also could find an opportunity here, which was the mitigation of this rejection week, which is pretty normal. A big rejection week comes and the price comes to mitigate it and get the orders that were left behind so that it can get some momentum and strength to go up. Right now, as we can see, and if you study the candlesticks, we are talking about a structure of candles that means that the momentum is building up. So it might just break the that structure. So right now, looking for sells from here is a possibility, but the probability of um, being killed or being eaten, or how can I say, the possibility of of not having success, it's greater. It's a big possibility. So the problem when we have something like this is, okay, so I'm at this point. We are in the 4 hour, but let's go to the 1 hour to see it more detailed. So now we see that, you see, like if we go to the 4 hour, this was just a four candle move. If we get to the 1 hour, we see a structure that was formed along the way. So you could uh, sell here, buy here. You see, like small buy, but we're talking about anyways of 20 pips. Um, and then a good sell, and then a small buy, and then a good sell again. Um, you could even try to sell it to this place, and of course, it would be a loss. But it was probably a possibility when someone got in here. Probably thought that this could go to the extreme at least, and then bounce from there and take the TPs out. But it was not enough. The power to go down. So now the power is to the upside. What we can see here is that going to the upside, it seems like it's going really fast, right? We just have uh, some kind of retracement, some kind of holding back here. And that's why, and that happens because this was the decisional for this move. So before breaking this structure, this was a decisional, came down, broke the structure. Then it was mitigated, broke the structure again. When it broke the first structure, um, then to go through the second structure, it basically held it up for a bit. The same happened. Actually, it didn't happen here. It was stopped here by some reason, but probably because of this resistance on the left. That's why a big rejection, probably a lot of orders to push it down from this place down, some sell orders or some sell stop orders. I don't know. I actually don't know everything of the market, like probably no one knows. But it's my thought on that. I'm just pushing this to keep it frame all the time. So now we're in the 1 hour. So let's see what the 15 minutes looks like. So 50 minutes wise, we have this structure that were formed. And then what happened was this break of structure, right? This was the break of structure that happened on the 15 minutes. After that, the price retraced a good while, like we're talking about 50 pips, came down 50 pips, and then recovered and move up. So it left this imbalance here, which is interesting, and also left another imbalance here, which the price might want to come and revisit before breaking that structure. So let's see if we can understand what's going on the lower time frames. But right now, we have in mind that this was the moment when the price, we should have gone and make a new low, and we didn't. So price became bullish, and that's why we are going to exchange colors and go to the blue dots. So right now we are on this bullish trend on the 15 minutes. So until it breaks this, we are bullish. Okay. The only other way that we could become bearish is if the price does something like this now, goes up and breaks this structure. So this means that this was the new main push, and so we would be bearish the moment that in the moment that this main push happens to the downside. Okay. We have to even go further down, but before that, I like to have mark my extremes. So this is a 1 hour extreme just below the weekly extreme. And we also have this unmitigated space here. So it's a consumed POI. Demand extreme on the 1 hour. Consumed as well. Because if it wasn't consumed, it would be this we don't even have anything without mitigation before this mitigation. I would probably select all the week at least, or even until this week, to see the gaps that are inside and then refine. Right now we have about 8 pips already as a good point of interest. I could take on GU. It's probably the max 8 pips. It's the max SL I will take on my trading, but let's see. Okay, so we're in the 5 and 15 minutes. On this 15 minutes, what we can see is that we have our well, let me check the decisionals for the 1 hour. So before breaking this, the last point where the momentum came from, and the last point where the price retraced and then the momentum came from, which is this big candle, is exactly here. So here we had a decisional before the break, right? Oh, no. Sorry. No, the break was here. So the decisional was actually here. So this is the last moment where it came momentum from to break the 15-minute structure. So this would be the 1 hour structure, this was the decisional. The 15-minute structure, this was the decisional. So let's mark the 1 hour structure just to understand what happened. So when the price came to that decisional, it retraced, but it wasn't sufficient to hold the price to get it to break the structure below. So the price needed to retrace back further than the decisional to get fuel, which is liquidity, from other provider, which would be the extreme probably. um, or it just got all this liquidity below these weeks here for a long time. They were here talking about since the 1st of June, so it's about 10 days of trading where people have kept buying with stop losses here, um, and ultimately here or here. Here they were taken down here, and then this candle took all of these stop losses that were below here. So maybe it was enough mitigating this last structure to get the price to explode above the weekly. Of course, a big help is that we are very close to, well, not so close, but actually a bit far away. But we know that probably the objective of the market is to go there. So of course, the buys are now being the push ultimately, and are becoming steeper. This is what we called a grab of liquidity. So it came down so fast that nobody had even the time to take the stop losses. If you were distracted this day, you lost. Probably there was some news here, and if that happened, you probably took your, if you didn't take your trades before the news, if you're buying, then this is a big time loss. Give me a second. Sorry. Okay, so what do we have? On the 15 minutes, we go further down to see what's happening, and we're seeing more and more detail along the way. So don't get scared. It's normal. It seems like a lot of information, and it is, but everything will be summed up on some on some on some time to help you go through your path. So everything is mitigated on the 15 minutes. Inside the 15 minutes, as you can see, a structure. We also have a high, a low, a higher high. And went on to make this high low, and then this high low went on to make this higher high. So right now we are also bullish on the 5 minutes structures. So let's mark it 5 minute structures. I also like to mark them, and that's it. So this is our last point on the 5 minutes. I will not mark this as extremes, or although this is a very nice move, um, as extremes or decisionals. But well, let's mark it just to guarantee that we are all in the same page. This is a point where the price could come to revisit and keep going higher. Although not this one, sorry, this is not the decisional. This one is the decisional. So we have the decisional here that was already touched, and we still have this extreme. But right now, after breaking this structure, we also have this new 15 minutes extreme. So this is the 15 minutes extreme on the 15 minutes. Okay, so this is 15 minutes decisional. "15 minutes decisional, 15 minutes extreme." We know that the high to clear on the 15 minutes now is still here, as we didn't break to the downside. So we didn't break to the downside. After we break this structure to the downside, we will have a low to clear, or if we touch the extreme of the higher time frames, and then have that breakout structure, we will start to look for the low to clear. So right now we still have the high to clear. It didn't break anything, so it can come here to this decisional and break to the upside. We are still having this high to clear. We know that this decisional is stronger than any supply that we have here. So right now, basically, we would like to look for buys here, but because we are already so much up in the structure, looking for buys here is a bit hard, as we have just 15 pips to get there. And actually, it's less. It's 5 pips. So with 5 pip um, to the place where we have our high to clear, it's too short. We don't want to buy anything there. This is like almost a stop loss. So what we want to do is to see some kind of structure developing to the up or the downside, and create alternatives. For example, if you are here, we do something like this. We have one leg, we have two legs that defines the intent of going back down, probably to the decisional or to the extreme. And so because of that, we have a supply here. And with that supply, with this supply, we can definitely work out. Like we could try to find, although we are bullish, we have a 5 minutes we have a 5 minutes break, 5 minutes break on under the 15 minutes high to clear, under the 15-minute high after clearing up the former high. And because of that, um, so when this structure broke up, um, the objective of the market was to find a new higher low, and it found a new higher low. Now it broke up again, and so the objective of the market should be going for a higher low before going to a new higher high. Although we don't know when that happens. So if it doesn't retrace back at least to the 50%, we are not very sure that this might keep going up, because it can come down before going up. And because of that, we could try to find a way to go on these cells until getting to the decisional, or wait until this get to the extreme, which is a more interesting idea, because then the push to the downside would be much higher. We're talking about 100 pips, so at least to the extreme. um, so that's the idea behind this. So this one, it was one of the possibilities. The other possibility is that this will keep going up until getting there. Then we have the break of structure, and then we can go. We might go on this break of structure if it is something like this, but it might also show us something like this. It goes up, comes down, goes up, comes down, goes up, comes down, and then finally touches, then does something like this, and then finally fall, right? This can happen as well. If this happens, we could try to, you know, try to enter on, this is the first leg, then we have a second leg, then we have the mitigation of second leg. We could try to enter here, have the power of the mitigation of this supply, and also a structure that is telling you that it's going down, it's going to change its nature to bearish on the lower time frames, and finally breaks all the higher time frames. It can also, of course, do this, come back again, mitigates on the top, and go down. A lot of possibilities can be possible. So we don't want um, to be in a rush to get into a position without having enough confirmations. We will talk about it before, after, but this is mostly. I've already talked about two confirmations. One of the first is the break of structure. The second one would be the internal break of structure, followed by a two-leg protocol, which is like two small legs um, with internal breakout that create artificial that internal breakout structure. That usually is used when we have a big push, and to break the structure to the downside would be such a big push that we want to get it in the moment it starts, just to get the most out of this new push after touching the supply, right? So now we have something like this, and here we have the one leg, two legs. When it comes back to mitigate this one, we hope that it does something like this. So we can try to get in here. Um, and the break just happens here. And because of this, we can get all these pips, or at least we can protect ourselves immediately if the price goes back. So protect ourselves, I mean, um, move our stop loss to the point of entry, which we called break even. So we move to break even before it comes back. Right now, I don't see much action, but let's go to the 5 minutes and see what's happening there. So internally, we see that even the 1 minute structure wasn't broken. So high, low, sorry, low, high, higher high, high, low, higher high. Okay, so low, higher high, lower high, low, higher low, and then okay, let's go again to be simple, to be clear. Low, high, higher low, higher high. This higher high, we don't know if it stopped already, right? If it can keep going up. And until it gets to this point and breaks something that we know, okay, we might have started with a complex, the complex we're back, or if we do something like what it's doing, like two legs of structure before breaking this structure and before touching this structure, which is not the case because we have to consider this that was already touched. But anyways, it was already touched, it came back up. If it breaks again, we can try to find some imbalance to get in. This is the imbalance that we would have get in here, as this is the first leg. You can also try to consider this as the first leg, this one, and then this is the second leg, and this is the mitigation. So this could be an entry if you are more aggressive. I personally stopped believing on these small legs. Um, so I prefer it at least to break this one, but even more, I would prefer to break this one before coming in. Even more after breaking a 15-minute structure, coming in immediately on the 1 minute. It's a possibility. It can work. We are so close to the high, to the extreme that I would say it wants to go there. So I wouldn't rush going in on a buy, on a sell. Sorry, and on a buy is just impossible to get in now. So in my opinion, we have to wait for the development of the price and try to see where it gets. Okay, so let's go to the 1 minute. So these are the 1 minute structures in detail. As you can see, a lot of information is now, and if you go lower on the seconds, it's even worse. So this was one leg on the 1 minute. I was talking about the 1 minute, but I was on the five. I'm sorry. So coming back 1 minute, the structures came back, um, broke the structure to this to the upside here, got liquidity out of these candles. Now we can start to see how liquidity works. So we have these equal highs, which usually serve as a magnet and a way to get impulse to break structures. And in this case, this inducement, how we call it, pushed below. We got the first internal BOS, and then we have a mitigation um, on we have a mitigation of that structure. So right now we actually might be assisting to the possibility of this actually break down and come to get at least that decision. Let me check how many pips are okay. 40 pips. It's a big one. Nice. Let's see liquidity. Okay, so liquidity here. We have some liquidity here in the form of a trend line. Let me select this one. So this is a trend line liquidity, and after that we don't have much more than the internal liquidity generated by orders that are staying behind on this uh, fast moves. um, what can I say also? This is liquidity as well. These are equal lows, but we have to understand the nature of them. So if we get these equal lows when we are going to the downside, we took liquidity out of here. So when a sell, um, if I'm buying and immediately got stopped out, what happens is that the system going to make a sell for us. So that's why when you see the price approaching here, people start, if they start taking their profits, and also the stop losses are becoming um, caught on the sell, it will push the price lower as the the buys are becoming sells. So we have to have this kind of structure to push it even further down. Then some traders start to pull it up to buy, to push the price up again because they are buying low. They are buying with a lower price. If you are an early buyer, what happens is that you will be stopped out as well. So early buyer went up, came down again. Again, stop losses were there, they were taken. It pushed it down again. Then we start buying again, and there where is the moment. So we broke structure again. The same happens. Stop losses that were here to the sells were taken. The price goes up, but it holds, and then more buys are coming, and then the price comes down. It doesn't hold. Take some sells into buys and push the price up. So this is how it works. Right now we have these lows that will become a strong, so this would become a strong PY to the upside if we have a break of structure there. The price comes back to mitigate this. This will probably hold to keep going up. um, it works as some form of decisional. The decisionals are named like that because they are actually decisionals. Like it's the point where the market didn't know if it wanted to break or not to the upside or downside. So we call it decisionals because we need to see what's going on the lower time frame structures before getting into a reversal or a continuation. So if it is a continuation, we want to see that decisional broken. Um, if we want to we think that it's going to reverse, then we want to check for the reversal patterns or reversal behavior of the market and react to it and get into an opportunity. So that's how it works as well. Okay, so trying to explain all my knowledge in 1 hour, but it's really hard. Even my voice is getting hurt. So let's see how this goes. It's a game of patience, a lot of patience. Also a game of psychology and feelings. So today in the morning I got 3 losses, and afterwards I I could recover from it, but it is hard on one. Give me a second. we still have to wait. So I'm I'm doing other things in the meanwhile. So we have an internal supply here created by this break of structure. I'm going to get this that was touched already. Right now, um, depending on if this mitigation breaks to the downside and we have a break of structure here, an internal break of structure, we might have an entry to the downside, a dangerous one, because like I said before, we are very close to the to the extremes, but we also had a very nice move today to the upside. We're talking about all this move, all these 15-minute candles move, 100 pips move to the upside. It's a nice move. So it might want to retrace something this day yet. And we might get some of that move because we have such a liquidity going on here, actually, even more. It's respecting this trend line. Um, so let's see if it breaks that structure, breaks to the downside, breaking all this structure as well. Because right now we had an inducement of this liquidity here. Let me zoom in so that I can explain a little bit further. Give me a second. Oops, I was not seeing, but we have a reaction. We have a reaction from the new point. We didn't break anything yet. We might want to go on this two-leg protocol here, one leg, two legs, come back, and then come down. I'm not too keen on it. We're just seeing the reaction out of the previous structures. But as I said before, the price might want to mitigate before closing the market. We are at 1 p.m. US. People are coming from lunch. Wednesday should be a very busy day. We are also in the middle of the month, so nice. We had some news today. This is news. Let's see what the price reserves for us. I need to see more structure to get into a sell here, but we are very close to the POI. I would believe that it wants to go above this Asia high from the previous day, and what can I say? It didn't take the liquidity out of these relative equal highs, but we might assist as well some resistance of these points to go higher. It's also the high of the previous day, so it might want to go over this previous day high. So this might be just an inducement to get that liquidity to go up and get that liquidity out of the market, which might push it over to our POI and then look for an opportunity there. I don't think I will have enough time today to see it, so I might miss that opportunity, but it is what it is. It is what it is. So this was moved to that place there. We still have the same main push on the 5 and on the 15 minutes. To have a new main push, like I said before, we would need this to happen. Didn't happen, nothing like that, not even close. We just have some kind of accumulation going to the upside at the same time that is accumulating a lot of orders being taken care of here, pushing the price up and up and up. We start to get some liquidity here that might be important for afterwards. If it breaks down this structure from here, it took the liquidity out of this high, and although it didn't take the Asia high, which it's like you shouldn't trust too much, right? You're going right next to the high of the previous day. We are so bullish. Why didn't it take it yet? Because it will take it after. So it might surprise that it comes here, induces this trend line, can respect this one because this equal lows are being respected. If we go to the 5 minutes, probably this is an FU candle, like I said. So we have equal lows, FU candle, broke to the upside, creating kind of a protected low. So the price might want to come here and mitigate here before going up. Take the liquidity out of this candle, or because all of this is already on the 5 minutes, on the 1 minute we might have gaps here, but on the 5 minutes, because it's already completely mitigated, it might just jump from here and go higher. Like I said, it's not a very interesting sells. One note about it is that I only enter on on projects of trades. I'll do the project of trade if I find an opportunity that gives me at least a 1 to 10, like for example coming here, my stop loss being 5 pips, and then because of that we would have to have 56 pips in this case, because it's 5.6 pip stop loss. This is a possibility, you see. So the objective of the market after breaking the structure, if it doesn't come back, and it just touches that POI and then creates some kind of structure to go down, and I get a 5.6 or 5.8 pip stop loss in this case to go down, I would say at least to the decisional it should come, or at least respect this new extreme on the 5 minutes, which give us a 1 to 10. So it's like that. It's easy. It seems easy, right? But we need to see confirmations. We will talk about them when I'm going to get in. There are a lot of different nuances on the confirmations, but imagine that for a moment, it just touches that POI, and let me push this to the next fair value gap. So here, we are talking about a weekly extreme. So it might just come to the 1 hour and come back, and then come to this decision of 15 minutes and go back up to the extreme, the weekly extreme, and then we see the big move. This is the move we want to take. Okay, so this extreme is incredible in terms of possibility to make some money. We were talking about, come on, it's like to go from well, not this one actually, but yeah, not this one, I'm sorry, that's the high to clear. The big opportunity would be here. Okay, so from here, imagine all that. It's possible for it to come down and break all this structure. I'm going to the monthly just to show you. So this is a monthly extreme. We are going lower. We broke this structure to the downside. So if this is not enough and it needs to go lower, we never know. If it needs to go lower and it doesn't break this structure, this we are talking about 3,000 pips, okay, to come to this extreme, and we don't have decisionals on the monthly, but of course, in the meantime, we might have, although they were all broken, and now it's just a matter of creating new extremes and decisionals to the downside. It's a 3,000 pips possible move from this place if it doesn't break this structure. Okay, so we just mitigated almost everything from this structure before all this move. So we need to know what is going to happen on this supply, because if it is broken, we also have a lot of space to go. After it breaks, we're talking about coming there probably. This one was respected, breaks both of them, creates like it's a relative equal highs on the monthly side. I don't know if it's going to respect this structure, but it might. It's the decisional to the upside. It might respect and come down for a very good bit, even if it is 50%. We're talking about 1,600 pips. It's a lot. And then keep going up. Okay, great. It's the sky is the limit. Give me a second. Okay, back to work. Let's see what's going on the lower time frame. Too big. I like to see it more like this. Let's see how it goes. Okay, first leg created. Um, to the downsides, we need to see the break of this structure to go down. Okay, this is the objective. If we don't see a break of structure here, we are not going in. If we see it go to that supply of the 1 hour, we might try to find an opportunity. But okay, this right now, let me see if I can show you what we have right now in a way that I can explain it. Um, so right now on the 1 hour, we have something like this going on. Okay, so now we're here. We should go to make a new higher high, right? This is a 4 hour structure. So 4 hour coming down, 4 hour coming up. Um, and we should see it going as we have this high to clear. But because the market moves like this, we are assisting to something like this, right? It can come down again, go to this decisional, or even come to the extreme again and go higher. And after touching that, we might see again moves to the downside, break all this structure to the downside, mess around with the BOS, with the 4 hour BOS, come back again, and you see, right, where I'm going through. So it might go up or it might come again, and you know, before going to break that high. So all of this can happen. It can also happen something faster, like going high, touching the extreme immediately. So some reaction out of it will come, probably coming to some extreme here, and then break the structure. Okay. This also might happen. It might happen that this breaks like this, and we might find an opportunity. We might find a lot of opportunities to get in here or here, or along the way on a sell here, which I don't advise, but at least for beginners or beginning intermediate. So let's go from intermediate to experienced. You might get the trades to the downside doing this move or even this move or this or this or this. You never know, right? It can even just do this, like consolidate and create a new accumulation. And out of this accumulation, go higher. So a lot of things can happen. That's why it's dangerous to get into a retracement, because the retracement might be really shallow. It might be a very good retracement. So be aware of the retracement entries, that at any point you can go back up. And so while you are in the retracement, follow your trade in a way that you can get out really fast, protect yourself, put your stop loss really close to like trail stop loss, trail the stop loss to the point where you're earning more, take profits along the way. There are a lot of strategies around in the market to do this. I don't know why my camera is going away from me. Okay, sorry guys. So there are a lot of possibilities. Another possibility, this would be the greatest thing of all, would be some retracement here, go there, break structure here, do this, and then come down here, and then do this, and then go up like that. Oh, and I would be so happy to get this move down and this move up. This would be priceless. It never happens like that. At least not to me. Didn't. Um, the move, the biggest move I got was around um, was around 1,500 points, 150 pips. So we are talking about a move like this, okay? And it wasn't without suffering, okay? It bounces, it goes, bounces, it goes. Of course, I took profits along the way, but I held it to the 150 pips. It was my biggest trade. It was a nice one. So let's see. This is our project. First TP, probably around here, or even maybe around the 50. Like, let me check. So break of structure. Um, yeah, maybe here, 128. I took a small amount. Then I would definitely take a big amount here and probably let it a runner go to this point, probably here. So it would be a 1 to 18 in total, probably 1 to 10. That's why I do projects for 1 to 10, 1 to 10 plus. It's important to have an objective. It's not fixed. It's always moves, but if I don't have at least an opportunity to get to 1 to 10, I don't get in. If I have an opportunity to 1 to 5, it means that it's too close. Like I could try to get this trade to this point and hope for God that it gets there. It can happen. It's probable. It's even more probable. But what it's the point of doing so much work when you can get a move like this and not allowing the price to give us some more profit. Yeah, it's a nerves of steel that you need to hold it. It's hard. You can even go to 1 to 100. It's like crazy. It's crazy. Like this can go to this place, right? So it's a 1 to 50. 1 to 50 is like one hell of a trade. Didn't happen to me yet, so I'm chasing the opportunity. This might be it or not. Let's check. Let's see. Let's see. Anyways, with the 1 to 10s, 1 to 15s, 1 to 20s, I've already got on my back testing. I got trades that went for 1 to 48. So 48% in a trade. Come on, it's crazy, right? It's one trade. You just need one trade in a, like if you have a 100K account from a prop firm, we're talking about 50K, right? So 50K for I don't know, some a week or two of work, of effective work. Like for example, like imagine that I got the 48% from today to Friday. There are some big news coming in, so it might happen. And if that happened, come on, in 2 days, 3 days work, 3 working days, of course we have all the work that is done before, like this, seeing the market, understanding, and of course all the training that you put up, like years of training. I've been a trader for 2 years and something now. I'm in my best shape until now. I'm still learning. I'm still working every day. Still do back testing 2-3 hours a day to guarantee them that I'm going. I'm keeping up and adapting to what's happening. You see, there was an inducement, not an inducement even. It was just a retracement, of, let's use our fib of, let me put this in the right place. Not even the 50%. This is a good sign because if never came to the 50%, so I wouldn't consider it enough retracement, which means that it might be still working on leaving all this liquidity behind to be taken afterwards. Um, One interesting thing is that this structure held the retracement, creating this demand, but it didn't need this demand to go up again. So it was enough with this accumulation. It even let this equal lows here that would be interesting to see come and get it to create some more demand from there, but it didn't. We update our high to clear, we update our higher high, and look at it. Look at if it is not beautiful. Look at it. Just barely past the high of the previous day, like we were talking about before. So that's a magnet. That's a magnet right there. We might have a reaction from there. We might have a nice reaction. We still have the same high to clear. Let's wait. Now we have we actually still have the same target, I would say. Yeah. So this is just one move. Okay. So we define this as our push. The push is there. So it moved, all the push went there. Even the 5-minute push went there. We didn't have enough retracement to consider it a new move. Maybe on the 1 minute we can try to consider it, but it's like in the seconds. I wouldn't consider it. Look, we're going to assist on the liquidity grab of this point. We just need to see if this one is enough to hold it, which was the first retracement after well, actually it was not the first. Yeah, it was the first 1 hour retracement. Okay, push retracement, so it's the first 1 hour retracement, and because of that, we are assisting to the liquidity grab of the 15 minutes moves. All of them were taken. Right now, this I didn't put a red circle because it never broke to the downside. Okay, so this should be a 15-minute move. It didn't break to the downside, so the last down push was this one, and look how sharp it is. It's amazing, right? 88 pips on a move that took about 2 hours. Okay, 88 pips on something like this. If we get the move from here, more or less it's the same amount of stop loss. We would get a 1 to 13 in 2 hours. 13%, $13,000, 130K if we're talking about 1% of a million. Not a lot of people have 1 million to manage, but actually it's a lot of money if it has a 100K account for $600 or $700, and you pass the challenge. So it's an amazing trade. If you have consistency rules, it would be hard to get the money out of the prop firm, because we could talk. It's a different subject. One day I can talk about it, not today. What if I do this and I reduce the size? Maybe. Yeah. It's better for you to read on YouTube. Yeah. Seems much better. You saw me doing all these drawings, right? So you know what is each thing, but sometimes it's confusing, right? If you don't know what it is, each thing, sometimes you may be a little bit overwhelmed about it. Just try to keep your drawings marked as you need them, and not all the markings, but I like to know where I am all the time, even if I don't go to the higher time frame. I really know, being on the 1 minute, look at all the information I got. Like, we know, so let's make a summary of what we know. It's important to have everything in mind, and because I'm a busy guy, I've learned to have a lot of tools. And one thing that I've always thought about was, why not have all those tools organized in a way that you can read everything at any point? So look at all the information that we have here. Just adapt this to the 1 minute. Um, so what do we know now? We know that we have a 4 hour consumed demand, which, if it is broken, we become bearish, of course. Then on the top of this, we have an 1 hour that is also consumed. Um, we have this information on the top of the screen on the right corner, saying that we are bearish on the monthly. So we want to go down at some time, at some point. We are bullish on the weekly. We are on the basically on the retracement of the monthly, right? We are getting retracement moves. Um, then we are also bullish on the daily. We are bullish on the 4 hour, and we are bearish on the 1 hour. So basically, this 15 minutes push, it's actually a counter trend in terms of the 1 hour, but the 1 hour is a counter trend of the 4 hour, and the 4 hour daily and weekly are counter trending the monthly. So look at how many counter trends we have. So that's why retracements, uh, as long as they are really high time frames, doesn't matter. You can have a nice retracement, a nice big retracement from the monthly like this. We are in the retracement. That retracement is a weekly bullish move. So we are in a main push of a bullish main push on the weekly. We are actually also aligned with the daily and aligned with the 4 hours. So the moves up are very interesting, even more if they come from a 4 hour extreme. So right now we are in our last extreme, um, daily extreme before 4 hour extreme, before getting to weekly extreme, which is also a daily extreme. Actually, I want to put this here because it's the same extreme. And that happens because we are pushing higher and higher and higher. So this is the higher high. and that higher high is just before, uh, well, not just we have a lot of space to the higher time frame with the monthly, but we know that we are getting close to the monthly, right? It's an important moment. It's a very important moment. So the weekly is being pushed higher all the time. The daily is being pushed also higher, but with retracements. So we might have, uh, on next day after we break this high, we will still be bullish on the weekly, but then we will break some daily structure, and it means that we are going to be bearish on the daily, on the 4 hour, on the 1 hour, and the 15 minutes in some moments. That moment, and the first moment where happens the daily to be bearish, 4 hour bearish, 1 hour bearish, and 15 minutes bearish, if you get that move, there would be the perfect move to get the retracement out of the weekly, which is aligned with the monthly. So if that happens in the POI of the monthly, imagine what can happen. Like, everything aligns, right? The weekly is still bullish, okay? But all the other will become bearish. The monthly is already bearish. So imagine the strength of a monthly 4 hour, 1 hour, and monthly, daily 4 hour, 1 hour, and 50 minutes bearish. It's so powerful that probably will be just a big run, just a big drop. Um, so if you are in the right moment to get in, which happens usually after a distribution pattern, which is, like, for example, what we'll probably do is it won't just go through there. I don't think so. It's not the normal thing. So what happens is usually it goes there and do something like this. Okay. Then you have a UTAD, and then you start seeing the breaks. And that's a moment where it comes down. Okay. So this is a distribution pattern. Okay. Distribution pattern is you have the UTAD, you have the tests, then you have the last point of supply, a new last point of supply, and after that, some minor things that happen, a new final test, and then boom, that's it. It goes down uh, really fast. So the problem is, when will we get out of this, right? Knowing, like recalling the structure, understand that structure in a point where, sorry, this doesn't go to the back, this goes to the front. Um, so in a point where you can understand that this was not the UTAD because it broke structure, but this one was not the last moment. So you could think that it is. You can try to get in here. You get some, and it respects this structure because we were still bullish. You just created a run on liquidity here. You got a lot of liquidity, so the prices pushes up, doesn't go through that because it wants to get more liquidity, comes down, mitigate again, goes up, break the structure up. So it took liquidity out of here, came down, it wasn't enough, go up, it gets some more liquidity out of these two, goes down, breaks the structure, but it doesn't break the last one. So goes up, and you have the UTAD there. Usually before that, it happens something like going up like really small, in a small way, like in a slow way. That's how you can understand that you might going to the UTAD. Then after UTAD, you have a break, and that break is important because then you're going to have a test, and you basically, after that test, you have this break, and you might want to get into the trade here. Okay, so this is the point you would like to have the trade, because after that, it's all coming down, baby. It's drill, baby, drill. um, Let's see. Oh, look at it. Some good reaction. It took liquidity out of that point. I've told you. Very interesting to see. Very interesting. So right now we have a new high to clear anyways until we have a uh, 15-minute structure being broken, which will happen right here. We took the liquidity out of here, so if I put a line there on the top, you can see that we took the liquidity out of the last supply. Okay, last 15-minute supply. The last 15 minutes extreme. So now we might see a reversal. It took liquidity out of there, took touch this last fair value gap here. Everything is mitigated to the upside. Um, let's see if we have an opportunity. We might have an opportunity now. Let's see. We have intention. This is intention. They push it down really fast. A lot of take profits were being done there, and then it pushed the price higher and immediately came down because the sellers are probably coming in. This is our trend line. Let's see if it is enough support to send it back up. The fact that it didn't get to the 50% here might indicate that it wants to come to this demand. It's not a very strong demand. It's an internal demand, so might not be respected, which is a good sign for an entry because we want this break to happen, right? And you think, okay, but why didn't I get the move from here? Yeah, I don't go on higher highs. So the higher high might not be this one. It might respect the structure because it's the one that broke structure to the upside. It's not respecting, but it's probably not respecting, but it might bounce or even might go higher. And then you think, why did I go in there? It's such a big move. It's catching a falling knife, right? Don't do that. Don't do that. Wait for the structure to develop. I did it so many times and I lost so much money. So yeah. We want to see more development. I don't even go on this break, right? And I can tell you why. And I might lose the opportunity because sometimes it happens. This is not 50% retracement, right? From here to there and then there to here. I could see it if we do this low, high, high, low, high, 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 low, high, high. Okay. So yeah, it is also a possibility. Okay. I don't like it as much as this one because we're in the 1 minute realm. So this is seconds time frame moves. Of course, before breaking the structure, it will break all those structures. But if it break all those structures, look at all the confirmations you have that it really have intent to go down. Like coming from here and breaking the structure and coming back up just to go there to the extreme, it might happen, but at least you have some confirmation that it wanted to go down. And so because you have this structure here that took liquidity out of all that stuff on the left, you have some confirmation that now if we are breaking this structure that should be strong enough to hold it to the upside, if it doesn't hold, then it say like it has a lot of strength to the downside, right? So it's it's an important move. So let's put it importance on that. So to the upside, we are getting tired. We didn't retrace anything today. Um, the daily candle is almost on its top. Um, Almost without a wick. We have a wick now. It might wants to close to this close before, just to go higher and break and close on the same price like it did before, not letting us know if it's going there or if it's already ready to come down. But it didn't take liquidity out of the former candle. It just rejected, like it ended up here, rejected, closed, and then opened, came down again, couldn't go through the low here, didn't come to the extreme, the 4 hour really small consumed extreme, and then go higher, broke the structure to the upside, but it didn't break the former high. So it just broke the high of the daily bearish candle. So do we have a lot of hope that it's going to break that one? It might, but it's reacting out of this one, so it might be just an inducement to keep going down. We might have come to a place where it's so high that we need some retracement back to this daily extreme. Let me refine this daily extreme at least to the 4 hour at least, because I'm not seeing any gaps there. Let me go with yeah, let it there, and I'll just put a sign of our IFC here. IFC as in institutional funded candle or FU funded candle. Let's put our amazing ray here as the 4 hour IFC. Okay. Yeah. 4 hour IFC. This is our 4 hour IFC. If I go to the 1 hour, I would say it would be lower, but we don't even have one. We just have one on the top. So the 1 hour is over the 4 hour. That's not very normal. We have a gap on the 4 hour, but we don't have on the 1 hour until there. But I'll put a sign there for the 1 hour as well. It's an important one. So let's mark as the 1 hour IFC on the bottom to know that it's an IFC that comes from the bottom to the top. Let's go to the 15 minutes, 5 minutes. Let's see how it goes on the 5 minute. Look at it. Beautiful. Beautiful, beautiful. So I was saying, why not coming down from here, seeing that rejection? Look at what happened. This happened in 1 minute, right? So you see this in 1 minute and you think, I'm going down? No, it's just a rejection. It might go up on the same minute. So it didn't break the structure there on the same candle. It just broke on the second candle, probably on the first seconds on the second candle. And then you think, oh, this is going down. This is such a trap. Then you get in and you think, whoa, I'm earning some money. If you don't think about taking all you have, like in the moment it closes this internal liquidity here, look at how perfect it is. It closed it and immediately sent you back up. So you would be probably stopped immediately. Like you went back up, took all the internal liquidity, left just a bit here. It's nothing. It's less than zero point 0.2 pips, probably zero point 0.1 or zero point 0.2. Yeah. So it's nothing. And zero point 0.2 points, not even pips. No, zero point 0.2 pips. Sorry, it's two baby pips. Okay, so yeah, and then went on to the way. So a thing that I hear traders always talking about at some point of their career, and it happened to me as well, is, and it's so annoying, is like you say, I know the way, I know where it's going. Then you put your trade, then you put your stop loss. It comes, gets your stop loss, and keeps going your way. And then you were stopped out. And then you imagine, you can think, okay, so now it's the move, but you already lost one. So you go and you put another one, trusting yourself, and it does another move like this one. It might come up again. It will take you again. So because if you think, okay, now it's the move, it will come down. Okay, but look at what happens here. We have an imbalance on the top. So it will take your stop losses again. It can even go higher, even if you got the move from here. If you got it from here, you leave there. You, as soon as it breaks the structure, man, it's luck. Okay, it's 15 pips. It's okay. It's not a 1 to 10. It's not a 1 to 5. It might be a 1 to 3. There are a lot of strategies that talk about it, about the 1 to 3s. A lot of 1 to 3s here, you know. So you can have a better win rate. Um, in some moments of the market, they are actually even more predictable. But I'm not very keen on being awake at 8 a.m. Or 7 a.m. to prepare myself and got the brain running. 8 a.m. to get into the markets in full force with my breakfast, my gym, everything done, and then get a move of 1 to 3. Yeah, it's 3%. It's a lot of money. If you do it every day, it's going to be 15% in the end of the week. But if I go to the 1 to 10s, I don't need to do all that. I see the structure of the market. I stay sharp at crucial moments, which is not always on the same time of the day. And in the end, you get bigger moves. Yeah, it's high stakes. So, high stakes, more time waiting, more opportunities lost on the 1 to 3s, 1 to 5 realm. But on the 1 to 10s, it is what it is. Like 1 to 10s, 1 to 20s, it is what it is. It's RR. You know, you get a good RR in spite of a worse win rate. So you're gonna lose more times probably because you're trying to get a bigger move. So you wait more time with the trade, and you let the trade go back on you. That's why you should take some TPs to pay your work, like on the 1 to 3s, for example. You can take, or on the 1 to 6, take 50%. 1 to 3 is paid, and then let it run to the 1 to 10, 1 to 15, 1 to 20, and you have 50% on your pocket, which is the same of the 1 to 3 that it was trying to get. And you don't have to be on the same time exactly to have that trade. I see it this way. I like this strategy. I prefer to wait and see things developing in a way that I can predict bigger moves. And then I have to work on my psychology. I keep working on my psychology to let the trades that are going in my way go. You know, like let it run. Let the winners run. Cut the losses fast. That's the biggest thing we need to have on this. It's hard as hell to do it. Like when you're getting money, you're seeing your money going green or blue, whatever it shows on your platform. You are $1,000 up, $2,000 up. Let it run. Let it run. 3,000, $5,000 up. Okay, my target is 20,000. It's $10,000. I didn't get there. It's so much money that it's really hard to say, I let it run. No, you want to put some money in your pocket immediately. So you take 500 when it's a 1,000. You took 50%. It's $500. Your objective is to get to the 10,000. Now you have to have the double of pips to get to that 10,000. So if the movie was 50 pips, now you need to have 100 pips. So you're cutting the possibility of making money. The problem and the backfire of this is that you let it run, and on the 3,000, it goes back to your break even, and it takes zero, and you take zero, um, or you put a trade and you have a loss because you waited too much, and then you believed that the stop loss was enough, and it wasn't, and it came back on you and took you out, and even worse than that, took you out for a baby pip, and then does the move. That happens often as well, and that's the most annoying thing in the world. I prefer to lose knowing that I lost because I was not right than losing because I didn't calculate well my stop loss, and that's zero point 0.1 pips killed me just before my move. I did it all right, but that minor mistake of the stop loss not being enough, doesn't have enough breathing space, like the spread, for example. Spread opens in some moments because of the all the trades that are pouring in on the sells and the buys. The spread starts to widen up, and then you're next to the stop loss. You're on the stop on your stop loss. All the trades are moving there because on important points it always opens the spread. So if you don't have enough breathing space for spread, it will kill you. The spread might be zero point 0.6. When it gets to those points, it's 1.2, 1.3, 1.5. It opens a lot. If you don't have a raw account, like I don't like raw accounts because you pay for trades before they start, and that kills your it raises your costs. um but if because of the commissions, but if we have one trade a week or two trades a week, with the 1 to 10 it's 20%. With a 1 to 20 it's 40%, so you get a good week of 2 days of 40 and 20% each day. You get 40% instead of 15% with the 3% every day, and you don't have to show up every day, right? You just have to be there when the structure is ready. Right now the structure is not ready to go down, right? If I want to catch a move here is because I have losses today, I would like to compensate for it. Before this moment I would definitely chase the market, like I know I'm right, it's going up, and then I put a trade here. Oh, it's respected going up, then it goes there, boom, it kills me. Then I say, okay, now it's going up, and then I get this move. Or not, I wait for this to go one leg, two legs, and then I did, okay, this is the trade, boom, it kills me. So it's not ready yet, right? It's not ready yet. You're trying to get really fast moves without thinking, looking at the seconds, manipulated. We know all that this is manipulated um, by big, big, big money. Not even one, all of them at the same time. They don't. I think they don't talk to each other. Sometimes we can see the fights between them, like really sharp moves up, really sharp moves down. Someone is taking and putting a lot of money at the same time. It might even be both, and those moments are crazy for us, really crazy for us, the retail traders. So yeah, let's see. Let's see what's going on here. I also like to follow other pairs. Not doing this today to not to complicate too much, just showing a little bit on what's happening on other pairs. So right now on the euro side, we're more or less like the GU. We didn't break this structure. We had this minus structure now, but this might just be a liquidity run, respect this structure, go back up, and keep going up. So yeah, patience pays. Oh shit. Patience pays. No, I can't seem to get this out of here. Okay. So yeah, on the euro side, we also are next to a POI on the higher time frame. We're just breaking. We're just going to the structure, testing the structure of the 1 minute, going back up. Look at it, and then I also like to follow the dollar to see what's happening. So look at what's happening. Like on the dollar, we actually had already a break of structure, right? So this is all um, minor moves to get this to the point where it takes liquidity out of somewhere. Look at it. We have a big move down here. So it might keep moving down. It didn't mitigate all this. We just barely started, right? And if the dollar is moving down because of the pairs that are terminated by dollar, the dollar is the second force. So if it goes up on dollar, it goes down on GBP USD and Euro USD. If it goes down on the dollar, it's going up on GBP and Euro USD. And so that's what we are assisting now. We are seeing now. So dollars coming down. It's compensating for that sharp move up. It might just be an inducement of this structures, respecting the structure before that, and keep moving down. If it breaks that structure, then we could find ways to get into the buys, but it has a lot of space to go down. As long as the same from here, it has a lot of space to go up, right? Look at it. This is a structure created after the equal lows FU candle. So equal lows FU candle, then you have some kind of second leg that is created with with inducements up, created lower highs, equal lows, sorry, equal lows, just for it to grab it, just grabbed it, took the FU candle on the downside with this structure, and immediately jumped, right? So inducement mitigated this. I think it might even have some kind of imbalance there. No, it doesn't. So it may be a false mitigation. But it's a nice reaction. So look at it. Did you try to get to the second drop? There we go. Might be taken out now. We have this imbalance on the top. And because of the aggressiveness that it's coming up with this such a momentum, I will not pick the first trade from here. It's too dangerous. There was times I did. I think I did one in the morning today. But yeah, so those are the mistakes we pay for. So we go there, We think it's going to drop from there, but look, this is not mitigated as well. It might just go up and mitigate almost to the top and then break. But to break, I need them. Now I would need this break to happen. And if this break to happen, if it happens and touch on this structure here, it might be interesting to go up, but like I said before, it's just a couple of pips. I won't risk it, right? Let it break to the downside. Let it develop. The retail traders are thinking, oh, we're getting the head and shoulders now. Shoulder, head, new shoulder, aligned to the downside. Come down, go back up, but imagine that it does this. Okay, it comes down now, comes here, go back up. You think that it wants to go there, right? It probably won't. It touched this demand. This is an important demand in the seconds, minute realm. It will probably just get there and kill you immediately. That's why patterns don't matter if they are not in the right place in the right time. So right now we're resisting that. I would say this might be a moment of a false pattern being created just for you to see, for you to think that head and shoulders is strong. Yeah, it might be strong. It's because head and shoulders means manipulation. And that manipulation, if it is done on a very interesting place like a higher time frame POI, if you identify the right POI on the right time, we are in the middle of the day in New York. We're approaching. We have already closed London, so it's just New York now. Um, that is manipulating price. They will probably do that move. They will probably want to go higher again. It's a very bullish day. It's very important to understand that in a bullish day like this, having a drop with just minutes without going to a PO, with just minutes patterns, without going to the higher time frame POI that it needs to go, it will be probably be killed in the process. That's how they make money. Okay, so we just need to go with them on the idea. Okay, so it's not fighting them. We don't have the ability to fight them. We have the ability to follow them and go through the breadcrumbs to follow them. If we follow them, we are in the right hands, right? You want to go with the big money. If the big money goes down, you go down with them. Like it's a hell of money going, and you just an ant on the top of the elephant going their way, right? Don't try be the ant like the elephant going south, and you think you're going north, but on the top, on the back of the elephant, right? You're not going south. You're not going north, right? You're going south. You just don't know until you know. And when you know, it might be really too late. So yeah, that's exactly what's happening here. The elephant is going up, the ants want to go down. So let them think they are going down, and we are keep going up. Simple. Simple analogy. I have to stop smoking. Time to shut up. can take this out of game. Too much. I don't know why these things are so sticky. Look, the Head and Shoulders. Look at it. Oh, a new small Head and Shoulders. The baby Head and Shoulders. Baby Head and Shoulders. Going crazy. I'm getting crazy. I'm becoming crazier every day. Like I said, I won't be on the time for this. We are about 2 hours and a half in already. My first live, not a good time to be live, but to explain the basics of my ideas, and also to have the time to explain it without being busy with all that's going on. It's really it's really important that I am focused. So I preferred to um, I prefer to just explain out of market busy hours, at least for the first live. If you like it, put a like there. Right now, it's my first live, so of course, not a lot of people came to see me. I'm an unknown guy. Um, I don't pretend to be famous, anyways. I just want to help people that are going through the same process as me. Know some people, know some friends. I've been knowing a lot of friends with the same ideas and same goals in the future. They are trading, and so I thought about it a lot before doing this, and I'm just doing it to keep myself, actually, to keep myself in check, because I'm explaining things. I will not do stupid or so many stupid things as if I was not being seen. So you are like my how you call it, the gym, the spotter. So you are my spotters, not to let me break my arm when I'm lifting the weight, or um, hurt me because just because you're seeing me. I feel myself observed, and because of that, I also feel um, I'm, I'm. This is a lonely task, right? I have trading friends. They are not always available, and I really think that having someone working with you on this, it's very, very, very good. You won't be alone all the time with all the mindsets and all the mind process that you need to master before going to the live markets. I did that mistake. I went to live markets before knowing anything about trading. I lost money. And then I thought, I need to learn something out of this. I'm going to learn the most that I can from the markets, from trading, and then decide if this is made for me or not. Until now, I'm not completely made for this. I must be sincere. Um, I have more than $1 million account to trade now, and I still don't feel that power. But I'm getting there. I'm really getting there. I will be funded with more than $1 million, and I will be in a point where seeing the charts naked, like I already can do that, but it's harder without my markings. I'm seeing the DXY without almost without markings, and I see all the structures and everything. So I'm reading the matrix very, very much well now, much better now. And so, um, why not help other people going through it? And the live sessions are a way of people seeing how I react to things, how I react to the things that are happening. Um, and because of those reactions, there is a saying. I'm a pilot, and there is a saying that um, always I always keep in mind, which is a good pilot learns with its own mistakes. An amazing pilot learns with mistakes of others. I'm learn with the mistakes of others. Sorry, not losing. I think I said lost, losing. I'm getting crazy. So a good pilot is someone who learns with its own mistakes. An amazing pilot is one that learns with others' mistakes, and because of those mistakes, a lot of other pilots are dead. So they didn't have the opportunity to learn from their own mistake because they died. You have the opportunity to learn from their mistakes and not be dead same in the same situation. So this is the same. So my trading has been improving a lot the last year, the last year because I went into the WWA trading strategy, and the guys are amazing. So I learned a lot from them. Other than that, I learned from Alex G, from his videos and from his boot camp that I bought. I was in his community for a long time, for 6, 7 months, until I found out about ICT. Then I studied ICT as much as I could because we're talking about, I think, thousands of hours of content from Michael, which is amazing. Is an amazing trader, an amazing professor, but in very deep theoretic thinking type of professor. So if you want to learn fast, it's not definitely there. Um, but if you want to go deep, it's definitely there. When you get more advanced, definitely is ICT. It's have some amazing information. I tried to learn ICT when I was um, getting out of Michael of Alex G strategy, and that gave me a lot of headaches because Alex G is a simple strategy. I went to the ICT, which is a very complicated strategy to learn from Michael. Um, and after that, I read and saw Wakar explaining things, and I thought, okay, he explained things in an easier way. And then I went in, and when I got in, I saw that it was also complicated. So it is very complicated. Trading is complicated. It seems easy because you just have to see some charts and press a button. It may even be luck, right? 50% of the time. It's not like that. If you go on luck, it's like the casino. It's always against you. So even if you think it's not, um, you can win once in a while, but if you lose all the other 50 times, and would you um, bet like $1,000 or $10,000 in one move, um, and you get 150K or 200K from that move? Imagine like that. It's interesting, right? And you never trade again. Come on, you were lucky that time, right? Why not be lucky again? So you go in one, two, three, four, 50 times. It will never, you will never earn that money back. Um, you will never, sorry, you will return that money back to them. The money will go back to the market. I can assure you that you won't have the nerve to stop trading anymore, looking for that lucky bastard opportunity again. So yeah, um, that's why learning it is so difficult. You need to understand it, and to understand it, you need to study a lot and practice a lot and give hours of your life to this, a lot of hours. I've been working on this 10 to 15 hours straight a day. Okay. I dream about it. I wake up thinking about it. I sleep thinking about it. And I have companies to manage. I have kids. I have a beautiful wife. I study to be a pilot as well. I'm a pilot, but I study to be a pilot. So it's kind of overwhelming um, to be connected all the time with this and not having results. So now I'm having results. I'm trying to share my knowledge with you, and I hope you enjoy. So see that the market is not pushing down as it should with the head and shoulders. Right now, actually, I think it's creating some kind of accumulation pattern. We will see the spring uh, taking up the taking up the liquidity to the downside to um, touch that supply, and it will fly again on my way of seeing things. We might not see that, and sometimes retail traders on the pattern trading are right, but let's see. Uh, we can talk about it later. I have to go. Thank you, everyone, and this might be a jam for my might be a jam on in the future, seeing myself doing this or not, and I will just take it out of the air. Thank you, guys. See you.